On today's interview, we have Bill Holter. Bill Holter is one of the biggest experts and thought leaders on the global financial system, precious metals, and much more. He's been a regular on our show, so I'm excited to have him on here today. Make sure that you hit the like button on either side of this. This will be audio only due to the location that Bill is in. That doesn't allow the bandwidth necessary for a quality video. So make sure you hit the like button on either side and we'll dive right into this. So thanks for joining, Bill.
Thanks for having me, Jake.
So for me, when I see what's happening in the world, I do have to say, even though I feel like I've been pretty prepared, it does surprise me. Whereas someone like yourself that's been warning about this for a long time, is any of this surprising you?
Well, I was going to ask you what part of it surprises you. I mean, we've seen this coming for quite a while.
Yeah, I mean, I guess it's one thing to hear it theoretically, and it's another thing to see it in reality, and to see the stock market ticking higher and higher and higher, and to see half or more of the population that literally thinks nothing is really wrong. Everything will just go back to normal once coronavirus goes away in a couple months. And so it's just been rather surprising to me.
When you say go back to normal, what we had back in February and prior, was that really normal? I mean, lifestyles for years now have been funded by debt. And I would say that that's not normal. Normal, you'd have to go back, 20 years or more, where lifestyles were, or even more than 20 years, where lifestyles were not funded and lived on by the use of credit. So, and as far as what's going on now, I think what could be going on in 2 or 3 months could look like insanity compared to what things look like now.
And what do you mean by that in more detail? Obviously, no one knows exactly what's going to happen. But what do you foresee over the next few months?
Well, just look at, here in the United States, we had a completely dysfunctional and fraudulent election. But assuming that Joe Biden does step into the office of president, you can already see some of the things that they're saying that they're going to do. And it's pretty much New World Order. And New World Order is not about the people, it's about the control of the people.
And how do you anticipate that being rolled out in real time in 2021? Does it look like they try to reinflate this debt bubble once again, and they move to a more direct to consumer type of money lending or quote unquote stimulus? How do you see this kind of unfold through 21 in more detail?
Well, I think what's going to happen to Americans is that we're going to find out that the dollar very well may go away, because their goal is one world currency.
Right.
So I think dollar assets are going to be absolutely smoked. You do not want your assets in dollar denominations.
And do you think that this is kind of the next step towards this digital currency and Fed coin and digital wallets and these types of things that we've been hearing about?
Yeah, absolutely. And when that gets rolled out, I think what you're seeing in the existing, if you want to call them private, but when I say private, because they're not sovereign, but if you look at the current crypto arena, I can't see, with governments going to digital currencies, I can't see sovereigns allowing the cryptos to continue.
Yeah, that's what's going to be really interesting if they allow it to stay to get more people into their own digital wallet and their own Fed coin, or what occurs with that? I guess only time will really tell. But what do you think? There's two kind of camps. There's the camp that thinks we're going to have an epic collapse, more in a deflationary long-term situation. And there's the other that's more in the camp of the inflation and the hyperinflationary camp. Where do you stand in your own interpretation of what's happening?
I think you're going to see both. I think you're going to see deflation of the things we have. For instance, houses, cars, investments, assets. And I think you're going to see inflation of the things you need on a daily basis to live. And I think that'll be a hyperinflation.
So it's like you foresee, because of how involved governments have been with markets, you see almost like this warp distortion. Some things are up, some things are down.
Right, absolutely. You're seeing central banks across the globe that have been buying and propping up stock markets. I mean, look at the Swiss, and they don't even try to hide it. Look at the Swiss National Bank. Look at the Bank of Japan. I mean, even look at the U.S. with the Exchange Stabilization Fund and the Plunge Protection Team, or the President's Working Group on Financial Markets. They're propping stock markets up. And do you really believe, without central bank buying, that interest rates would be where they are now? No way. There's absolutely zero risk premium on a 10-year treasury that trades with a yield under 1%. I mean, there's no risk premium. That's below the inflation rate.
What do you think needs to occur to have real big type of inflation? Is it that people have to, quote unquote, be let out of their homes and they have a vaccine, or do you think it just goes to direct the Fed sending money to people's accounts? What do you think takes to get that money velocity back up, or do you not foresee that happening?
I think one thing would be fear. I think the coronavirus and the quote unquote vaccine, that doesn't have anything to do with it. Yes, it did dampen demand, and it did dampen velocity. But I think when all is said and done, the real push for hyperinflation is if you want to call it a monetary event, where holders of currency want to get out of the currency. And I think to some extent you are seeing that in the stock market. I mean, I'm sure you're seeing a bunch of retired people that did nothing their entire life but own CDs. Now they find out they can't get any interest at all. They're being corralled into the stock market. And I think when I say use the word corralled, I think that's what's happening. I think you're seeing people being corralled into risk assets, and the rug is going to be pulled. But the debt doesn't go away. Understand that.
Right.
Your assets can go away, but your debt does not.
So when you say your assets can go away and people are being corralled in and the rug's pulled out, I'm interpreting what you're saying. So you tell me if I'm on base or off base, but I'm interpreting what you're saying is that they're pushing everybody into this, and you expect another financial event, quote unquote, that pulls the rug out of it. For instance, I saw, there's been a lot of talk about the Great Reset and Klaus Schwab and all of those types of things. And I watched a video on another simulation. All these freaks do all these simulations on events they want to occur. And the new one that they were doing was a simulation on, essentially it was like an EMP attack. For those that don't know, shutting out all the electrical power grids, crashing the financial system, a financial cyber attack, I think is the exact words they use. Were you kind of insinuating something like that when you say corralled in and then the rug pulled out? Is that, or am I off base on that?
Well, I mean, that's that's one possibility. But what happens once you get everybody invested in risk assets? The shorts are gone. Everybody's bullish, and I think all central banks need to do is step back. Who's going to hold the market up? Because right now, central banks have been buying stocks, buying bonds, and that, for the most part, has propped the markets up. So if they step back, what are markets going to do? Interest rates will rise because you don't have central banks buying the necessary amount of bonds to keep rates where they are. They step back, and where are the buyers going to come from for the stock market? I mean, the real economies are not generating cash, so there's not a big surplus of cash to go into the markets. It's already gone into the markets. So when they back away, you get a crash. Now, are there ways for them to do it on purpose? Of course there are. And, like you said, an EMP, that's obviously one of them. But what's the result of that? People have lost their assets. They still have the debt, and they're total slaves, debt slaves.
Yeah, interesting. So I'm not, you're an incredibly experienced researcher and commentator on these markets, and I'm just 29-year-old guy that does these interviews. But when I look at it, I think that for them to maintain the control that they want over the world, and their vehicle to do it is through currencies and through the monetary system, that their way to do it is more to lull people back to sleep by the Fed buying stocks if they need to, central banks buying all of these stocks, continuing to basically
they're already, Jake, they're already lulled to sleep.
And I'm with you on that, but I guess what I'm saying is my thoughts are, I wonder if they're, instead of a crash, they're going to have the invisible crash and let it keep going higher and higher and higher and higher. Whereas you said, you rolled out the possibility of them pulling the rug out, and I don't know what will happen. And you talked about hyperinflation as well. If they're pulling the rug out, do you think they use that as an excuse to then go full-blown hyperinflation, buy everything, print trillions? Or do you think they pull the rug out, let interest rates rise? Nobody knows, but I guess you talk to so many people and you're so deep into your research. I was just curious where you stand between that, because part of me thinks they're just going to hit the printing press to a whole new level and let it keep running. Whereas you said, about the possibility of them pulling a rug out.
I did an interview, I think it was 3 years ago, and it was titled "The World is Venezuela." Look what has happened in Venezuela. They have shortages, they have hyperinflation of the currency, and they have hyperinflation, obviously. If people want to acquire rice and beans and food and everyday living stuff, it costs them way, way more in currency. Their stock market has gone through the roof, but it's only gone up half as fast as the currency's declined. So they've lost 50% of their purchasing power, and goods are not available, and the currency is becoming trash. And I think that's where, that's inflation and deflation at the same time. I mean, look at, if you own a piece of real estate in Venezuela, are you going to get the same value you would have gotten 3 or 4 years ago? You'll get more bolivars. You'll certainly get less gold. That's deflation.
That's interesting.
It's deflation of price.
Yeah, I understand that. Everything else is going up. I'm glad I asked that, because it's, someone like me, I guess I just think inflation, but it's even weirder and probably more along the lines of truth to think of a blend between both of them. So that's an interesting thing to think about.
And what better way to enslave and control that enslaved population than have a population that's massively in debt and then destroy their assets via, destroying the currency.
Yeah.
So you've got, like you're talking about not MMT, you're talking about a guaranteed monthly income or whatever. That's subsistence. And that's subsistence for people that were upper middle class. Because their annuities are wiped out, their pensions are wiped out, their stock portfolios are wiped out, and they're still sitting on debt for their home. Which, that's a whole nother topic. Here's a question: what's going to happen January 2nd after these moratoriums on bankruptcies and evictions stop?
Yeah,
I mean, the real estate industry is broke, but it's not seen to be broke because nobody's getting kicked out.
Right, and so are the banks, right? So that's what I just had an interview.
That's the thing. The banks, instead of getting their quote money back, they're going to end up with the properties.
And that is really the more in-depth details of this kind of great reset, where by 2030 they say you'll own nothing and you'll be happy. This is kind of essentially you're illustrating prospects of the details of how that could play out in real time. Is that correct?
Yeah, and that's the plan. The be happy part, forget about that. But the you'll own nothing part, that's absolutely true.
Yeah. So, do you think that they roll out this digital currency here right at the start of the new year, or what?
I have no idea on timing.
Yeah.
All I know is they're speeding up.
Yeah, that's very true. This has definitely been the great quickening this year. So let me ask you, let's shift over to, let's talk a little bit about gold, and let's talk a little bit about your work with your partners and such. So I don't know I know you are a dealer of bullion, and so you're talking to people all the time. So first of all, I'd be curious on what your take on the sentiment is. On the internet, the sentiment has turned very negative very quick from this 12% drop or so in gold and the drop in silver. What is your take on the sentiment right now, and overall what is occurring right now in the gold and silver market?
I've seen very steady and very strong sales all year long. I have noticed with my emails, and you can kind of judge fear, panic, and yeah, there's people, how long is this going to go on? People are just freaking out. And I basically tell people, if you understand the end game, then don't worry about how you get to it. And the end game is gold is money and has been money for 5,000 years, and it's not going to all of a sudden not be money. Gold is going to get you from here to whatever the next system is with wealth, and probably expanded wealth. But it's almost like a psyop, watching paper contracts get sold left and right. And then conversely, if you look at the COMEX last month for November, there were actually 30, at the end of the month, there was 30 tons of gold standing for delivery. Now, typically, and you could go back 20 years and you'll see that the month of November is probably the poorest delivery month of all. It averages half a ton. This past month of November, I think they started out at 5 tons, and there was queue jumping. In other words, people stepping up, buying a November contract and immediately saying, I want delivery, and it ended up at 30 tons. December, which has historically been one of either June or December, are the largest delivery months. First notice day was 99 tons. And a typical December is 25 tons. So what you're seeing is they're selling or paper contracts are being sold to push the price down, but yet there's massive buying saying, deliver my gold. I mean, that's a complete 180-degree dichotomy.
Yeah, that's interesting to define it as a psyop. I listened to Andy Scheckman from your company, Miles Franklin, published one on Friday, and he was illustrating this in detail, and he was saying that he had like 4 people call to sell, and over 200, he broke down his numbers, over 200 buyers. He said no one was selling, and he illustrated some of those points you were discussing. But when I hear those types of numbers of people taking delivery, I say, those are people that are actually taking delivery, whether it's a bank, a sovereign wealth fund, whatever it is. Do they even have that much to deliver that? I mean, how much do they claim they have versus how much was just swept up from delivery just off of this December and November contracts?
I just saw a chart. I can't quote you the numbers, but I just saw a chart that as it stands right now, the amount of gold on hand versus the amount standing for delivery is at multi-year lows. So what I'm saying is the amount of supply has not increased, but demand has definitely increased. And ultimately it ends up in a default situation where there's more people standing for delivery than there is gold supplied to deliver.
So,
and that is the jig is up moment, by the way, because that will spill over to every market.
Yeah, that's what I think. But let me ask you, and I mean this with no disrespect, I'll say something like that, and someone will say that's the pitch of bullion dealers that's been around. Everyone says the COMEX is not going to be able to deliver. They've been saying that for years.
It's happening right before their eyes.
Got it.
I mean, 100 tons for 1 month. I mean, there's only 2,500 tons produced per year if you take China and Russia's production out. So just COMEX did 1/25 in 1 month.
Wow. And is there any data on what they claim that they have?
There is. I have not looked recently to see what the actual holdings are between the dealers and customers. But like I said, it's at a multi. I think it's 10. I think the chart I saw was 10 years, and it's at a 10-year low. And I know it was not lower than that prior. So we're basically at all-time lows as far as the amount of gold claimed to be held for delivery versus the amount that's demanded.
Yeah, and I saw some data recently on the production numbers for ounces or tons of silver and gold, how much it had went down this year due to just that brief mine closure. I mean, that did some damage to the amount that was supposed to come onto the market. So definitely a perfect storm there.
Hey, Jake, as far as silver is concerned, the month of December, there's 47 million ounces standing for delivery.
Wow.
The world only produces 800 million ounces.
Jeez Louise. That was for November or that was for December?
That was December.
Okay, got it. So
that was the big delivery month.
You would think that just over the next 12 months, there would probably be a total delivery of silver that exceeds the annual production, which I guess then that leads to the long-standing people that have become pessimists would call a folklore, which is eventually the COMEX can't deliver. It seems like if you just do that basic math, you got to be getting pretty close to that, huh?
Well, and it's not just COMEX. I mean, look at the Look at the ETFs, look at GLD, look at SLV, and read their prospectuses and understand that they're not required. It's not required to be all physical gold or all physical silver. I mean, they can have all sorts of derivatives, contracts basically, that give them the right to gold and silver. But if you look at what's happened this year, there's been a huge takeoff of supply, supposedly, by just those two, and then add in the other ETFs. So the demand has been huge this year.
Yeah, that's very interesting. I didn't think about the ETFs and the fact that they might be buying paper contracts. So
might be. Just if you read the prospectus, they are.
Okay. Yeah, that's very interesting. So we got to be getting close. So the overall market I've sensed from my channel and the amount of comments and emails on the channel, left and right, I see people say, if it doesn't go up soon, I'm cashing out and I'm moving into stocks or US dollars, or I'm moving into Bitcoin, or I'm done with gold. You are not in that camp. You think we have some more movement to reapproach those all-time highs that we hit here soon?
The all-time highs are ridiculously low. What these people are telling you is, I'm a sheep and I'm willing to be corralled. If you don't understand that the system is broke. The system is broke because there's more debt outstanding than can ever be repaid. There's more debt outstanding than there is money to pay it down. So when all is said and done, where do you want your capital? You want your capital, you want to be in cash. You want to be in a fetal position. And that fetal position is owning real money. And real money is silver and gold.
So one time I heard an interview with you and Jim Sinclair quite a while ago. It was an older interview that you did with Greg Hunter, and you guys did it together. And I've been wanting to ask you this. And in the interview, Jim said that he talked a little bit about his family. So I went and bought that book that he discusses his family in detail, and I was pretty amazed reading it. It was fascinating. And then it made me kind of rethink you guys quite a bit, and looking at his family being involved in the financial and gold markets. And he said that eventually, he said his family's been involved with the prices on metals, and eventually these same people are going to play the other side. Can you talk a little bit more about what he said there, and kind of the bits that you guys discussed about his family's involvement? I think it kind of came up sleight of hand, where you basically said, while you were talking to Greg, well, why don't you ask Jim? The Sinclair family's been involved in the metals industry for forever. Ask him what he thinks. And so can you go into that a little bit more?
Yeah, Jim has long said, and I fully agree with him, that the shorts, the ones that press on the price, press on the sentiment, if you will. If you go back to the 1970s, you saw it then. You saw gold being held down, but it was the bullion banks that were long at the end. And what they're doing is they're trying to, like you just said, people are saying, that's it, I'm out. Well, what does that do? When they flip, when they're long and they run gold, silver, commodities to the moon, there's going to be as few as possible on board. Thus, more debt slaves.
And do you think that's...
Do you understand the connection?
Yeah, absolutely. And do you think that because this is what I've been contemplating, and when you think about what you said about this paper contract almost being like this weird psyop, do you think it's that they're coming to the point where they realize it's coming to a head, so they're trying to shake out to corner basically as much of the long position right now? Or is that me reading almost too much of a conspiratorial angle? What is your thoughts on that?
Well, yeah, look at sovereign wealth funds, central banks. They're net buyers of gold.
Right. And what would it take for them to go long again? You said that happened. I believe you said that happened in the 70s. I mean, what would it take for them to do that again? Especially someone that, I made a post about this conversation, not you and I, but the message of this conversation about eventually these same people rigging it are going to want to go long. And I got a lot of negative comments on that, where people, obviously pessimistic, or they think that's ridiculous because the price manipulation has happened for so long. What would it take for that to occur where they would want to go long, and sit on the profit side of letting it moonshot and other commodities as well?
If you listen to what Ted Butler has said and has written, that's already been occurring. With, for instance, J.P. Morgan saying that they're long a massive amount, hundreds of millions of ounces of silver, real silver, and that allows them to sell short paper contracts. So they're selling against a long position to smash the price down, and what do they do when the price is down? They pick up more silver.
What do you think the point is that would cause them to stop doing that and go totally long?
I mean, it could be any type of event, but it's a process. That's not a light switch. The actual movement in the price is a light switch movement, but morphing from short to long is a process. And again, going back to Ted Butler, what he's saying is that he calls them the Raptors, the smaller shorts. J.P. Morgan's going to hang them out to dry. In other words, they're short, and all of a sudden, J.P. Morgan flips and starts buying and pushes the price up. Now what do the shorts do? How do they cover? And when they cover, what happens? When they cover, or try to cover, prices go ballistic. I mean, you mentioned just a few minutes ago, the price of gold approaching its all-time high. I mean, you're talking $2,100. And and I've said this probably, I think I first did the math 3 years ago, but if you took the debt that the U.S. has outstanding, just the on-books debt. I'm not talking about the off-books obligations like Ginnie Mae, Fannie Mae, Social Security, you name it. But if you take just the on-books debt and divide it by the amount of gold that we supposedly have and has not been audited since 1956, gold would need to be over $100,000 an ounce to pay our debt off. So when people talk about, are we going to go back to the old all-time high at $2,100 and thinking that's like a pie in the sky number, that's a ridiculously cheap number. That's like dropping 2 pennies out of your pocket.
So somebody listening that might have fallen into that pessimistic sentiment crowd over the last while might say, well, if it could happen, why haven't they let the price run yet?
Well, think about it from the standpoint of the U.S. Treasury and the Federal Reserve. If the price of gold right now is $3,500 or $5,000 or $10,000 or a higher number, gold is the direct competitor to the dollar. So you'd have people that just from a momentum, from a sentiment standpoint, you'd have people cashing their dollars in to buy gold because their dollars are devaluing. Because gold is the ultimate competitor to any fiat currency. So the reason for years and years that they've suppressed the price of gold is to keep the illusion that the dollar bills or the euros or the yen or whatever that you have, the paper ones that you have in your pocket or in your bank accounts, actually have value. And what I'm trying to tell you is that dollars, euros, yen, they're all credit-based currencies. And this is a credit problem. It's going to lead to a credit crisis. It's going to lead to a currency crisis. And the end game is the collapse of credit, the collapse of currencies. And if you understand that that's the end game, then you don't even try to time buying gold or silver. The time to buy it is whenever you have money to buy it. You put it away and go to sleep knowing that you know what the end game is. It's math.
Well said. So then, theoretically, then, as long as there is a U.S. Treasury and government currencies, we will continue to see a suppression of the price of metals that doesn't allow it to really move, or no?
Just look at any past hyperinflation where currencies blow up. There still is a central bank of Venezuela. There's still a central bank of Zimbabwe, of Argentina, you name it. And there are currencies like the Russian ruble that basically went to zero and had to reboot. So just because there is a U.S. Treasury or there is a Federal Reserve doesn't mean that they're not going to lose control. Markets, at this point, markets are so much bigger than central banks, and the only way they're able to, if you want to say, be big enough to still control markets is strictly through derivatives with 50 to 1 or 100 to 1 leverage. It's like Frankenstein. The monster is now too much bigger than his creator. And the monster is bankrupt. By the way, so are the central banks themselves.
Right. So one of the things that I've been thinking about, that I guess if you and me were these evil people that basically wanted to control the financial system to thus enslave humanity, and we were net buyers of gold, and you could see this system right now, people losing trust in it left and right, and you can see the cracks very noticeably. My thoughts, like if it was you and me, I would say, Bill, people are losing trust right now. I think we got to let the price of gold run, make a statement and say, look, we're net buyers of gold. This is how much gold we have. We've had a debt problem. We've mismanaged all these monies and currencies. And so we're letting the price of gold run. It's at $10,000 now. Look how great our balance sheets are now. And so trust us. Now that we have gold at this price, our balance sheets are looking great, and there's nothing to worry about with these currencies. What do you think about?
Well, let's look at that argument from the standpoint of the U.S. We say we have 262 million ounces that have not been audited since 1956. I personally assume that gold is long gone. So is a central bank or sovereign treasury, are they going to step up and say, look at our balance sheet, but you have to trust us that we have the gold? I could see China doing that because I firmly believe they have over 25,000 tons. And our 8,000 tons, I think, is a complete joke. And I think we're going to find out that gold has been going out the back door for years.
So then isn't it in the interest of these people to then keep the price of gold suppressed so China doesn't have this incredible advantage?
Yeah, but basically when all is said and done, he owns the gold, makes the rules. And these years and years and years of suppressing the price made it much easier for China to accumulate what they did accumulate, because they were buying gold steadily month after month at below true market clearing prices. I mean, they might only have a third or a quarter of the amount of gold that they have right now had prices been allowed to trade to where they should have been versus the fiat currencies.
That's something that I've thought about as well. I don't know if it was stupidity that allowed this to occur or if this has been done intentionally, but it's something I've thought about with the amount of gold that Russia and China have accumulated.
Well, it's intentional. And think about it. If you're the Wizard of Oz controlling the levers, you want to keep being the Wizard of Oz and controlling the levers. So if you let gold take off, all of a sudden your levers don't mean anything. So it was keeping the price of gold and silver suppressed was a way to retain power. Like Robert Rubin talked about, doesn't matter what it costs, as long as you can kick the can down the road 6 months, it doesn't matter what that cost is. We'll deal with it then.
So, a couple final questions. In conclusion on the gold topic, for somebody that is the sentiment is lost. It sounds like I wasn't around in previous bull markets, but it sounds like that's a very common thing with the way that it moves. But do you you're rest assured that this is not the end of the gold bull market, as many media pundits are beginning to say?
No, that's laughable. The central banks absolutely 100% positively have got to continue to print and try to reflate, because if they don't, then the whole credit edifice comes down. And as I mentioned before, all paper fiat currencies are credit-based currencies. So a credit implosion destroys the currencies. Currencies get destroyed either way. They get destroyed slower under the reflation. That they get diluted. But if you have a 1930s style depression, then currencies get wiped out. And look what happened in the 1930s. The Treasury revalued gold from $20.67 to $35 to try to reflate.
So the reason that was done was because they were using it against their balance sheet to try to, quote unquote, stimulate the economy the way that they could at that time?
Right. The Treasury was so much smaller. I mean, it was a much smaller entity at the time. And yes, they reflated. What they did was they called gold in at $20.67. Once they had whatever they took in, then they inflated, whatever you want to call it, their reserves of gold, and that strengthened their balance sheet.
Interesting.
And in today's world, a move like that is not going to help a lot of central banks, because a lot of central banks were not, the dollar is the world's reserve currency. So it's not going to inflate the dollar. That will destroy the dollar, and it'll destroy central banks across the globe. I mean, for example, I lived in Costa Rica for 5 years, and their central bank, their reserves are dollars. They have some euros, but they're a dollar-based economy where you can use either the local currency, the colony, or dollars. So a destruction of the dollar is going to destroy that central bank, along with 100 other central banks.
Right. So let's talk about, you've used the term endgame a few times so far. What do you foresee the endgame is?
Well, it looks like central banks, or what they want to do is go to one world currency. Whether that happens or not, I can't tell you whether they'll get away with that. Maybe it goes to 5, 6, 7 currency blocks. The digital euro, the digital dollar, the digital yuan, the digital yen. But it looks like, obviously, we're in a high-tech world now, and it does look like that's what they want to do, is go to a digital currency where the problem I see with digital currencies is if you have to do everything in a digital currency, your masters know everything you buy, everything you do. They know everything financially about you because they see it. I mean, it's obvious. It's not private at all. The second thing is, if you're a dissident of the state, they can just shut your account down. You could have $100 million or $1 billion in digital accounts, and they call you a dissident, and boom, the light switch gets turned off, and then what do you have? And that's why Jim has always talked about get out of the system. Be your own central bank. And gold will always have value. And some people say, oh, well, they'll just outlaw gold. Well, if they outlaw gold, you could pretty much bet within a week or two's time, the price of gold will double from where it was when they outlawed it. Black markets always, or legislation that creates black markets always creates higher price.
Interesting. So with the rest of your team and Jim, are these the types of conversations you guys are having right now? What does the rest of the team you work with foresee? Are you guys all on the same page with
yeah, we're pretty much all on the same page. And we do a weekly call for subscribers, lasts about an hour. And yeah, we talk about this. Obviously, recently we've talked more than we'd like to about politics, but you know, it's that season.
So a couple last questions. And for anyone interested, it's a great service that Bill has. I'm subscribed to it, and I'll make sure we have it in the link in the description right there down below. Let me ask you, Jim, on that, or let me ask you, Bill, on that conversation with Jim, and he said his family's been involved in the metals markets and he still talks to many of them, sees many of them. What is his latest word on that?
Well, Jim, you got to understand, Jim is like the black sheep of his family. Jim, or I should call him the white sheep of the family. I mean, he does not believe in globalism, and you know, his family goes back a couple hundred years in finance. So he's not he's not in touch with family to the extent you're thinking. I mean, like I said, he's the black sheep.
Does he expect?
And just him doing his website for all these years to try to help individuals is not something that globalists would smile at.
Yeah, I thought it was when you mentioned that sleight of hand in that interview, and I went and looked into it. I was rather surprised, and then it just made me start thinking, what type of conversations do Bill and Jim have in private about specifically the gold and silver market? Does Jim think that this same? What were you going to say?
No, go ahead.
Does Jim still sit by his same idea that he had said maybe 3 years ago in that Greg Hunter interview, that he thinks that they're still going to play the opposite side eventually and let the price run?
Yeah, and he believes that you're going to see gold at a minimum at $50,000 an ounce, probably bid and offered by the same central bank. They'll push gold to a price, and it's going to be a plateau price. It's not going to be like 1980, where you saw gold go up to $8. You know, it went from $100 in '76 to $875, and then collapsed. He does not foresee a collapse after the marking up of price. What he sees is like the central bank of China offering gold at $50,000 an ounce and willing to buy gold at $50,000 an ounce. And they are the likely market maker because they have the most gold.
Yeah, it's such a big concept. I think it sounds absurd to a lot of people. You really think though that type of a situation of a revaluation of gold is in play in the near future?
Well, let me comment on it's such a big concept. You're mentioning, and you know, I can see it in my emails, that people are panicked because, oh my God, gold went from $2,070 an ounce down to $1,770. It was a $300 drop, and people are they're freaked out about it. But even after this pullback, go back to the year 2000, 20 years. Guess what the number one performer of any asset on the planet has been? It's gold. I mean, it far outpaces the S&P. And it far outpaces any other commodities.
Interesting. So I
mean, gold was $250 an ounce. Now it's $1,800. And the beginning of 2000, the Dow was 10,000. Now it's 30,000. And yes, there's dividends, but you're only talking what, 1-2%.
Interesting. So,
and one other thing to look at is look at when we're talking about gold going from 250 to 1,700 or 1,800 or 2,000 or whatever the number, that's a direct reflection on the purchasing power of the dollar. The dollar's basically lost versus gold. It's lost 85% since January of 2000. That's the way to look at it. It's not that gold went up, it's the dollar went down. And because the dollar went down, other assets are priced higher because it takes more dollars to purchase the same asset. Same thing with a car. A brand new car today versus the price of a brand new car 20 years ago. Yes, there's a few additional high-tech things in the cars, but they're not grossly better than what they were 20 years ago. But they are much more expensive. And that's not that the car's that much better, it's that the dollar's that much weaker.
Do you still
That's what inflation is.
Yeah, well said. Do you still think that America is a place to be? For those that don't know, you used to live in Costa Rica. You felt that in the event of this type of collapse, you'd be better suited in America. Has 2020 made you re-question that and potentially getting out of America, or do you still stand by your original idea?
I guess the best way to answer that is under a new world order scenario, where do you go? I've had some people from Ecuador tell me, oh, this place is happy-go-lucky, everything's fine, and, they won't participate. We'll see. All I can say is I lived in Costa Rica for 5 years. My Spanish got good enough to understand that they smiled at us because they liked when we spent money. And basically, I came to the conclusion that when the shithouse comes down, if you don't look like them, talk like them, you're not one of them, you're going to be one of the first targets because you're rich.
So, last question. Do you think we're in a little bit of the eye of the storm right now? The printing presses have been at pause, real big financial policy moves or money moves, currency things. It's kind of all been on pause right now heading into the end of the year because of the obvious situation of the elections and Trump and Biden. Do you think we're just on a little bit of a pause and when January comes rolling around, there's going to be a lot of fireworks? Or do you agree with that idea of kind of the eye of the storm?
I think we're in a pause politically, geopolitically. And as I mentioned, I think if Biden wins, then or if he is seated, you can't convince me that he won. I fully believe that this was a fraudulent, stolen election. But if he is seated, then the storm is going to come full force from the standpoint of mandatory vaccines, you name it. They're going to want total control over your life. If Trump is reseated, then, and this was my hope in 2016, is that knowing that the financial system is going to come down, my hope was that it would come down under the rule of law, under the Constitution. Now, from a financial standpoint, have they really paused? I mean, central banks added $14 trillion to the system this year. And that, by the way, is inflation.
Yeah, and I knew you were going to say that. Has it really paused? And you could definitely argue it hasn't, right?
Yeah, and you have this new plan, and so it's not going to be 1.7 trillion. It's only going to be 900 billion. Well, go back to 2008, and the public went batshit crazy over $700 billion TARP. And we found out after the fact, I think it was 2 or 3, even 3 years later, that the Federal Reserve lent out, I forget what the number was. It was something like $17 trillion all over the world secretly. And it was found out after the fact. How much have central banks stepped up to save broke entities? I mean, look in China, look in Japan, look at the US, look at Europe. These central banks have been propping zombie corporations, zombie banks. They've been propping them up. Not to mention, like what we talked about earlier, and I don't know what they've done in Europe or other places, but in the US, there's moratoriums on foreclosures. There's moratoriums on evictions. What's going to happen? My question is, what happens January 1st? Do they extend them? And if they keep extending them forever, what you're doing is one man's asset, his home, which he's not paying on, if he can't be kicked out, so he gets to keep his home, but what happens to that mortgage? You're impairing another man's asset.
That's why
because one man's debt is another man's credit.
Right. That's why I don't really buy this whole, it's only going to be 900 billion. I think almost nobody is willing to factor in the amount of people that are behind on their mortgage, not just 1 month, but 6-7 months, and the amount of people that are behind
9 months.
Their rent. Yeah, right. And the amount of people behind on their rent, and the amount of people that, we already had 75% of people living paycheck to paycheck before any of this happened. And I think that people haven't really grasped how many individuals are literally hanging on by a thread. And I just don't see how they only do 800 billion or 900 billion. Personally, I don't see.
And it's not just money, Jake. It's not just money. Go downtown to Seattle, Portland, San Francisco, Chicago, pick a city. Go downtown. They've already destroyed them physically to the point where, they're having to basically rebuild storefronts. They're empty and people are moving out in droves. So what is that real estate worth? And the reason I ask what is that real estate worth is because there's debt on everything. Just drive through a city. Everything, almost every single piece of property that you see has a mortgage on it. So now what is that mortgage worth? And I think it was up in Buffalo, New York. The biggest hotel was like 400, 500 rooms. It's now valued at 21% of what it was in 2011.
Wow.
And they closed. I mean, so what is that debt worth?
I don't know what it's worth. And I guess then that begs the question that I've been trying to ask everybody. What do they do? Do they just cancel everybody's debt and say, hey, here's a new system? Or do they print 900 gajillion trillion dollars and give it to everybody?
Well, if they cancel debt, that's the other side to the trade. And that debt is held where? It's held in banks. It's held in pension plans. It's held as an asset. So if you cancel the debt, then you're destroying someone's asset.
To me, that seems like the less likely scenario. It seems like if their goal is to control the world, and I could be wrong, but if their goal is to control the world, having people in a little less of a chaotic state would be of their own benefit. So then I think, well, I guess it seems more likely to me at least that they would just go to the highest level of money printing that you've ever seen possible. Give it to everybody on their mortgages, give it to everyone that's renting, give it to all these banks, give it to all these things to keep this thing, quote unquote, floating.
But what does that do to the value of the money?
Oh, it kills it. I think, I'm aware.
There's your hyperinflation.
I'm with you. If I was a betting person, my bet would be more on that side as opposed to letting everything collapse. Where do you stand on the two sides if you had to make a quick bet?
You conceivably could see like somebody stomping on the gas, stomping on the brake, stomping on the gas, stomping on the brake. I mean, it's hard to say which way it's going to go. But what I can tell you is either way it goes, your gold will have value and it will increase in value. It could go to the extreme in either direction, and you'll have fiat currencies basically go to zero and real stuff that you need and real money basically go to infinity.
Yeah, interesting. So I just thought that would be a nice kind of conclusion, because I guess that's the $1 trillion question is what do they do with all these people that need money and all these mortgages and all these rent payments? And I guess we'll know here really soon. I mean, how much longer can you kick this thing down? How much longer can you kick this can down the road? It's December 2nd today, and those things are pretty much up here in January.
Well, I think here's the way to frame it. No matter which way it tips, whether it's inflation or, whether it's a hyperinflation or whether it's a financial collapse, having an ounce of gold in your hand, it's heads I win, tails I win. Yeah. Because gold and silver are the only monetary assets that cannot ever default. They can never go to zero.
Yeah, well said. All right, any final thoughts you want to leave us with, Bill? That was some really good stuff. I truly appreciate it.
Other than get yourself prepared. Get yourself, if you have the means to do it, get yourself in the right location. You don't want to be, you saw over the summer with riots, and I think that's merely a warm-up. Those were, if you want to say bought and paid for, those were contrived riots. I think you've got the real riots coming. And I spoke, I guess it was probably 2 years ago, talking about this will probably end in a civil war, and was called, a tinfoil hat conspiracy theorist. And what'd you wake up to this morning? Ray Dalio saying the same thing.
Yeah, I did see Ray Dalio said that. And I guess that's a whole separate conversation about Ray and what we think and what I think about him. But I think
just try to become as self-sufficient as you can, and prepare yourself physically, mentally, with goods, with the ability to live, and spiritually. Just be prepared.
Amen. I think that's a beautiful place to end. So everybody, I'll put the link over to Bill's website in the description. Please be sure to hit the like button on this video and leave a comment down below. Let us know what you think about it. It does help the videos reach more people. This is a very important message at a very important time in the world. One of the ways you can contribute to sharing it is just quite simply hitting the like button, leaving a comment down below. Go ahead and share this with someone. Share it with your mom, your dad, share it on social media. Let's get this message out to more people and make sure that the average person is prepared as possible. So thank you, Bill.
Thank you, Jake.